Two of the most talked about stocks in India's renewable energy space just dropped their fourth quarter results. It's Inox Wind versus Suzlon Energy, the big green energy showdown. So, where should you put your money? Let's break it down together, right here on Dalal Street Decode. First, let's get on the same page. Both Suzlon and Inox Wind are key players in India's wind turbine manufacturing sector. But they're not just selling windmills, they offer turnkey solutions, from manufacturing turbines to executing full wind projects, to O&M services, and remote monitoring. Over 94% of revenue for both comes from the domestic Indian market. So, the execution game here is everything. Let's understand the size of the players. Suzlon Energy, 96,747 crore rupees. Inox Wind, 25,364 crore rupees. Suzlon is nearly 4 times larger in market cap. But is bigger always better? Let's find out. If you find this type of deep research insightful, then you're going to love our channel, so do subscribe and give a thumbs up. That will help us to grow. In terms of order book strength, Suzlon Energy 5.6 gigawatts. Inox Wind 3.2 gigawatts. Fresh inflow during fiscal year 25 for Inox 1.5 gigawatts. Suzlon clearly leads in terms of total backlog. Let's talk numbers. Quarterly year-over-year performance. Total revenue growth. Suzlon is up 73%, while Inox Wind has surged by 130%. Total expenses growth. Suzlon has increased by 70%, and Inox Wind has grown by 113%. EBITDA growth. Suzlon has seen a 94% rise, whereas Inox Wind has experienced a massive 157% increase. Net profit, or PAT. Suzlon is up 365%, including deferred tax gain. Without it, the growth is 128%. Inox Wind, on the other hand, has risen by 375%. EPS growth. Suzlon's EPS has grown by 358%, while Inox Wind's EPS has increased by 379%. That's some serious growth on both sides, but Inox edges ahead on Q4 numbers. Now, let's zoom out to the full year comparison. Total revenue growth. Suzlon up 67%, and Inox wind up 112%. Total expenses growth. Suzlon up 63%, and Inox wind up 72%, with other expenses rising 2.5 times. EBITDA growth. Suzlon up 80%, and Inox wind up 142%. Net profit. Suzlon up 214%, or 117% without tax gain. Inox Wind went from a 46 crore loss to a 435 crore profit, a massive turnaround. EPS. Suzlon up 204%, and Inox Wind from negative to positive. Inox Wind is showing that classic turnaround story. Now let's dive into operational strengths. Suzlon Energy, EBITDA margin Q4 at 18.3% versus 16.25%, FY25 at 17% versus 15.75%. Execution, 573 megawatts this quarter, up 110%, 1,550 megawatts for the full year, up 118%. Working capital receivables up 196%, expected in growth phase. Inventory up 76%, payables up 380%, aiding cash inflow. Cash flow from operations, 1,092 crore versus 80 crore last year, up 1,265%. Inox Wind, EBITDA margin Q4 at 20% versus 18.75%. FY25 at 21.3% versus 18%. Execution, 236 megawatts this quarter, up 83%. 705 megawatts for the full year, up 88%. Working capital, receivables up 243%. Inventories stable, no stockpile. Strong payables and non-core asset sales helped inflow. Cash flow from operations, from negative 364 crore to positive 138 crore. Both companies have strong tailwinds, but Suzlon's cash generation is worth noting. Now the key strategic update. Suzlon gave formal guidance for the first time ever. A bold 60% growth guidance across all parameters for FY26, exceeding analyst expectations. Plus, net cash position improved to 1,943 crore in March 2025, up 836 crore from December. From a valuation standpoint, Suzlon's PE is 46.7 times. Inox Wind's PE is 57 times. So, Suzlon is cheaper relative to earnings. Final thoughts? While Inox Wind's results are optically stronger, much of it may already be priced in. On the other hand, Suzlon, with aggressive guidance, better cash flow, and a more attractive valuation, could outperform over the next 3 months. But hey, this is Dalal Street, we track quarter by quarter. Stay tuned for more updates and deep dives. Drop a comment, which company are you betting on, and why? Like the video and subscribe to Dalal Street Decode to stay ahead of the curve. Till next time, keep your investing sharp and your analysis sharper. This is Dalal Street Decode, signing off.